Forward to the Okay, guys, this is Wednesday, April 1st. It's April Fool's Day. We got a fool coming on tonight to deliver the state of America in a little while. That guy we call our president. I'm mad I put that on on record,
Yeah, Corey. You gonna have
but
to bleep that
anyway,
one out.
no, I'm not. I'm not, man. It is what it is, man. It is what it is. But let me switch screens, man. Probably should have kept that off of air. But it is what it is. He's speaking tonight at uh at 9 o'clock. So we might still be on it for a little bit of this, man. But you already know. We had ADP farm non-farm employment change. We had a little jump in that by 20 about 21K on that. We had core retail sales up 0.5%, and the retail sale month over month up 0.6%. Then right around 10 a.m. we had ISM PMI. We beat on that. Expected was 52.3. We got 52.7, and then we got ISM prices at 78.3, where we were expecting 74. Then later on the night at 9 o'clock, we got Trump, and then tomorrow we got unemployment claims. Tomorrow will be our last full trading day of the week because we got Good Friday going into Easter weekend. So this is going to be pretty much the last day of the week to trade. Happy April. This is my birthday month, so I'm gonna be like having a good little time coming up for the rest of the week. On Friday, we got average hourly earnings and farm payroll, and then we got unemployment rate. However, it's possible that we may or may not get to participate in this depending on how the setup goes. Because the market will be open for this news release. But, if it does or doesn't give you a setup around that time, I would not be forcing a trade on a Friday. I would just take it as it is because the market closes on ES on Friday at let me see. ES closes at 9 on ES over here, so you won't be able to trade it after 9. I think it's the same thing for NQ. And yep, NQ is 9. So Dow is 11. Weirdly enough, Dow is closing at 11. And VIX won't even be open on that day. So I would steer clear from it. If you do get in, take your money, get out, don't play around with it, right? Just get in and get out, right? No earnings really this week that we need to be worried about. No earnings at all on Friday. I also heard that there were some possible shift in the tone. It hasn't been calculated, but I saw some of the feds mentioning that later that we could actually get a hike in the interest rate, even though it's not showing on here. But I did see some things mentioned about that. Crude oil, let me open that up before we go into dollar. Crude oil, since we made those highs at 106 on crude oil and then on WTI, where are you? WTI. WTI is 120. We kind of been chilling. Where you at? Spot. Let's just use this. Okay. So ever since we made that 120 high over here, we kind of been chilling inside of a range between this high, this low. And this is because we've been kind of pushing up and down in this range, this huge range. We just set the high over here, set the low, and then we tighten the range over here, set another high, set another low, and then we just expanded. we kind of ranging but pushing up at the same time. And the more confusion we have on what is going on with the war, this is gonna probably stay like that. And then even after the war is over, and I'm doing that with air quotes, um, we still will have an issue with oil prices because they've, in a sense, disrupted the global oil supplies, and they've ruined pretty much by bombing Iran. They've kind of put uh, places like China, Russia, and some Middle Eastern, all the Middle Eastern company countries in kind of like a rough patch right now because a lot of their oil producing equipment has been damaged. A lot of their refineries have been damaged. Um, the Strait of Hormuz is still closed, and contrary to what Trump has been saying, it's been uh, Iran has been in a complete opposite. Where Trump said they've done negotiations, Iran has came out and said that they have not done it and don't plan on doing any negotiations yet. Where Trump said that, hey, we're pushing boots on the ground and they don't want to have boots on the ground. Iran, in the contrary, has said, bring the boots. We ready for the boots. So it's kind of like whose propaganda is gonna win. That's really what we're dealing with. Like who who's gonna say the coolest thing right now. That's kind of what we dealing with at the moment because it's kind of who he said she said at the moment. We don't have any um strong narratives. And it was true that Trump did talk to some officials, but the leaders of the nation came out and said they haven't spoken to him. And I think that I don't have the story of late, but the story basically was saying that the people that he was speaking to don't have any direct ties to the people who are managing the government of Iran at this particular moment. So I don't know where that gets us. If whoever he's talking to is the right people to talk to, I don't know. I don't know who that gets us to. So it's kind of like, where does this go? Where is this going? And it's just one of those situations where you just don't know what to believe right now, and you have to kind of lean off of the idea of focusing on what's happening and just dial back into the charts more. If it's technically available, you pay attention to that more so than you do the news, but you still keep that in the back of your head that, hey, any given time, some craziness can pop off, right? So you'll notice right here I've been kind of going back and forth in between what I get on CNBC, right? CNBC, Trump addresses live updates. President speaks on Iran tonight. Trump Iran speech ignores the risk of a return to 1970. Trump says Iran's president asked for a ceasefire, but U.S. wants Hormuz Strait open first, right? This CNBC. What do you see right here? Iran's foreign minister says no ceasefire proposal issued, right? So this is literally exactly a perfect example of what you have to do and the way you have to consider this. So Al Jazeera, I've been using them and watching them to get like a different opinion. So that way I'm getting like the full spectrum, right? And I think that that's what we all have to do. BBC, use them too. And then also, um, another thing that I've been doing too is TikTok and Twitter and looking at pages that are related to, or pages that have like either both pro-Israel and pro-Iran interests, just like pro-Palestine and pro pro-Palestinian interest as well because I'm using all that data to kind of give me my own opinion about the situation. So that way I'm not just getting force-fed one side, you know. And just like we just saw literally the exact opposite statements coming out of Iran versus US, right? And it didn't even take a tough search, right? We just popped up quickly and see that they actually asked for no ceasefire, right? So that's how you gotta kind of approach the things that are going on. It's definitely not only is it a war of, military assets, uh, it's civilian assets, it's propaganda war, it's financial war, it's all those layered on top of what's actually taking place right now. So that's and I brought it up because you asked about it too, Trees. Just this is kind of like the way we have to approach things, right? And um, even with our trading and stuff, right? You we've been dealing with swings of 200 to 300 points, you know, just out of the blue, and you might have a setup that you would normally see, like, hey, I like trading fair value gaps with the order block with once liquidity is swept, right? But that high that you need to use as your stop loss, that high might have been 200 to 300 points. So you won't be able to put the same risk on, or you'll have to be a lot more patient with taking the setup because you'll need to like wait for a clear lower time frame setup to happen, even though you might have been getting the setup from the 15 minute or the 5 minute. You may have to wait for the secondary setup so that way you can lower your stop loss for that trade, or you're just going to go in with the smaller size on the trade and just use the 20 to 30 point stop loss. But for me, I kind of I would rather wait for the trade than to try to get in on a 30-point stop loss. So that's how I've been approaching it. So let's look at last week. So um Sunday we had our setup. Oh, I didn't even get the screenshots. Dang it. Never mind. We'll just go ahead. So Sunday we were looking at hang on. I can just pull it from here. Okay, Sunday we were looking at either bearish move down on gold on dollar or bullish move up. We kind of just been chopping up. You can already see that we opened up the week, chopped up, and then we sold off, right? So we pretty much took this first leg up and then we sold off and pushed down into this range. We pushed up a little higher and then we sold off. So we're kind of sitting around this new week opening gap we had from a couple weeks before with the potential to drop down into this one, right? You see, we pretty much ended up here. So we pushed up a little bit, took out that high, set the weekly high, then we just sold off from there. So we took this low, took these lows, all this liquidity over here, and we ended up coming down right into that new week opening gap, and we left the weekly low. So our ideas now is if we're gonna keep going lower, we take that low, we potentially take this low out, and maybe take this low out. And then if we keep falling out, we have a daily fair value gap in the yearly opening price. So we got a lot of stuff we can bounce from. But for now, I think that we get a bounce from the two, or from the one or the three on this move, one or the three, and the three could potentially tap the yearly. So I'm liking that to be the case. Um, if we get a push back up to the upside, we got this little short-term liquidity. We got this new week opening gap we already been using, and then we got the monthly opening price. This swing high, this order block. I'm not gonna put it on here, but just know it's there. This order block right here. That's where I'm thinking we get the one or the three to reject from. If not, the three pushes up into this bearish um, fair value gap, and we try to sell off from there. If we want to get a bounce to the downside, I think it happens at the three, or maybe even the one. Worst case scenario is the three. Um, so, any questions on dollar? I think YouTube got it, so I don't have to go into heavy detail on dollar. Nope. Okay.
I'm going.
Tracking. All right. So let's drop dollar. Where is the chat? Okay, that's here. DXY. Oh, I hope I'm not getting sick. Let's look at gold. 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 We said that if we were to push down, we would take out trade through this fair value gap. But I think it was a good call for this fair value gap because it actually made the low of the week, I think, at this particular fair value gap and just pushed up from there. And then we ended up like pretty much taking out this high and trading through this order block from the 4 hour. So we'll see that. It's over here on gold. So yeah, you see we made our low right here inside of that gap. So I think we had just got off or we were still on this call when this low happened. And that pretty much was the low of the week, which man, that would have been a nice trade to catch, but it is after hours or not during my normal trading time. Then you can see this fair order block on the 1 hour. That's on the 4 hour. We traded into it. We traded right through it. Then once we got to it, we rejected it once, traded, made this low. Then we traded back through it. And then once we got above it, we started using that as support. And then we kept trading higher. So we ended up coming into this volume imbalance. And if you don't know what a volume imbalance is, it's from the daily. Let me show you what it is just to reiterate. It's when you see two wicks touching and nobody. Or one, or you can see no wick and you can see another candle wick body touch. So it's like you see that there's price in between there, but you don't see in a balanced price range, right? A balanced price range looks something like this, where this candle pushed up, this candle pushed down, the following candle pushed up, and then we see like this wick doesn't leave any price in between. This has price thinly traded, right? You see thin traded price because you got this week touching this week. That means that there is probably some orders that didn't get filled or that they were mispriced throughout this order where like maybe one order went in at 48.96 and then we skipped prices throughout this and the next order got filled at 48.67, right? So this missing price in between there. And you can use that just like you use a fair value gap where you want to put high to low or low to high. You measure it in three different levels, the high, middle, and the low, and then you can take a trade from there, right? You see the same thing over here, right here. And if you had a got that, you see like, hey, once it came back into it, sold off pretty much around the middle, you would have been able to take this trade and, this is daily candle, but it still gave you that, right? So we can a lot of times we can expect to use these just like we use a or fair value gap or any other kind of gap that we trade. It's the same logic, right? Just like we see the one down here that's on the chart, we did the same thing and inverted it, right? Once price traded into it, it wicked it right here, traded into it on this candle. It tried to sell off from it. You can tell because we got this big wick near the high of it. Then we sold off, but we couldn't sell off. But the next time we got into it, which was on this candle, we ended up trading through it. We tried to sell off again on this candle, and we ended up rejecting it and pushing up and using that to take us higher. So we'll probably get some kind of reaction inside of this volume imbalance on this setup. So that's the next area of interest that we kind of looking into because we back in this one for the first time since it's been formed. So once we get into this, I actually like the one as the potential area to reject from, but I didn't want to clutter up the charts. So I did put the three as the rejection potential area, but I actually like the one and the three, but I think that we get some kind of move like either the one or the three or somewhere in between, and we may get at least a rejection from it. Whether it's going to continue to go higher or not, or continue to go lower or not, it's not, we don't know that yet, but that would be a good area to see a rejection from, right? If we do get the rejection at three, we hold inside of that range and we could push up higher from there to take out this high and then trade up even higher. Then if we sell off, we got the low from the day today, today's trading range, which is pretty much right at the monthly opening. And then we return back into this order block from the 4 hour. And at this point, this order block is probably going to try to be used to the upside. So I think that the one is the first area of rejection we look for the upside. And then, but if we keep going, the two takes us down below whatever low we make at the one. And then we possibly take out this liquidity and move back to the weekly opening range on the three. So let's just pull that down just a little bit. And then again, if we get back into if we get the bounce at the three instead of the one, that sets up the opportunity for us to get a actual sell off at the order block and see if that wants to hold. But we'll just be watching it. So we'll be watching it. We'll be watching the gold. We will be watching gold. Then let's go VIX. VIX, VIX, VIX. We only got one more day of VIX. We've been seeing that VIX been kind of bearish for the whole week. It's been coming off of these highs we got at around 31. Once we start getting below 31, at this point, it's actually leading us to, you can see the indices, you can see VIX was bearish all week, and you can notice that the indices have been bullish all week. So that's where my bias has been for this week, been to the upside. I have taken a couple trades to the downside, but again, even the trades that I've taken from the downside is because there was choppy price action throughout the charts. And even on today, the VIX was not the greatest. You can see we kind of ranged really. There was a opening gap and we were actually sitting in that most of the day where we only peaked out of it these couple of candles and traded right back into it. The range of the opening, the daily opening range. I don't have it on this chart, but if you can throw that on there and you'll see we were inside of that range all day long. Um, I got it on another chart that I was trading off of, but we ended up gapping down. Once we created the gap, we set in between the gap. We traded outside of it to the downside. We made the low of the week, and then we traded right back in the gap, made a new high of the day on it, and then we kind of closed right back near the opening almost. So you just gotta deal with it sometimes, right? This is what we have to deal with sometimes, right? So if we continue on the trek to the downside, we take out the weekly low, we trade into this daily price gap over here from a couple Wednesdays ago. And that'll be our first area we could see a potential bounce off of, right at the 22.36 area down to 22.51. Then if we don't get the bounce at the one, we could possibly get the bounce at three, which does also lead us into a price gap from, I think this was from the daily. I just drew it different because I didn't want to have the colors overlapping. But this is a daily price gap, and we could get the bounce from there too. So the one and the three are the probable bounce areas if we're gonna push back up. And then if we can't, the four takes us down below the three and down below this previous week low right here. Let me update that. It's a previous week low. And that would be the downside. Upside, we got this little short-term liquidity that we made from today, and then we trade back into this gap from the daily opening gap. And we would be looking to see if after we took these highs, we traded back into this daily opening gap and see if we want to use that to start a new move to the downside, where one is actually the highest probability rejection area. But I could also see it happening at three, which is because we got this order block. This could be coming into that order block to sell off. But if we get the sell off, the four could give us a bounce inside of this new day opening range. New day opening again is 26.49, 25.91, and 25.33. We could get a bounce from there if we are going to try to push back to the upside. And then we got this swing high, and then we have another gap from March the 6th that we would be trading back into, which tomorrow and tonight could be volatile. So we could get a spike in volume because of Trump speaking. So look out for that. Be on the lookout for that. And this is VIX. Now let's go to Dow. Again, VIX been bearish all week. Dow and the rest of the indices been bullish all week. So we set a new yearly low. We came off of our correction level. If we notice that we came off our correction level, right? And you notice, look at all of this sideways price action from Tuesday right here at this 10% level, right? So you see this move happened because of this 45, 823 price level. And we've gained back about 2% of this. So this means that we're off that 10% level, but we still hanging around it, right? We still could be coming back into that, right? So the main thing I'm looking at is this order block for a downside target. So like if we're gonna bounce, it's gonna bounce off of this order block or this fair value gap because this right at that 10% level. So if we get a bounce, this is mainly where I'm going to be looking for. So if we sell off and you start seeing price push down and you see it pushing down with a catalyst, um, I would hold off initially. But if we do get a bounce, this is where I would expect it from. Because I think that they're trying to set this low as the low right now, which is why all of the news that's coming out is so kind of interesting because the reason why this is pushing up is because the news coming out about the ceasefire ending the war in a couple of weeks. Yet at the same time, I just showed you guys that the other side ain't saying the same thing, right? So the markets are moving based off of US news. And I think it's doing that on purpose to keep the market from dropping for real, like dropping really, really bad, right? Because they know that, market makers, the politicians and all that stuff, they know they don't want to see a 20 to 30% drop. They don't want to see 15%. And they know that they don't want to see it because approval ratings are not great right now. And, that's not going to lead to the election turnouts and midterm the way that they want if the economy is not doing great. And they can talk you out of thinking that the economy is bad if it's only down 10% or 8%. That's natural correction. That's what they're going to say. But if it's down 20 to 30%, that means people are taking hits in that 401k that's been bragged about so often. So keep that in mind. Keep those things in mind, right? Okay. So we got a tight little range. We got the lows from London low, and we got the high week we made so far. We stuck in that range. It's sitting in between this daily. We've been in this daily fair value gap pretty much all day. We just been chopping up and around up between the low and the high. Now we sitting right at the middle. If we do keep selling off, we take out this low. We take out the low of today or yesterday or Tuesday's low. And then we have the monthly opening price, which is right here, just below us. And then we get into this fair value gap. We could see the bounce off the one, but I doubt if we get it off the one. I think the three is the most high probability because the three trades us into this strong order block that we made to push us back to the upside. So this is more probable for us to, and we could dig further into this order block, right? I just put the three here, but because we got this gap, the week opening gap from last week, and we got the 10% mark, we could see the three come all the way down to this level again. And if it does, you can try to look for a bounce. I wouldn't take this as a high probability trade, but you may get 1 to 200 points out of this bounce because it's a huge area. Everybody's looking at this number, looking at this 10% area right now. So you can expect for something to happen right there. If you don't, you get the retracement. You take the four to go ahead and go lower, and then your goal would then to be try to take out this yearly low. If we keep pushing to the upside, we got yesterday's high, the weekly high we made. We got this week, this high from last week or a couple weeks, yeah, from last week. And then you can see we back into this 4 hour fair value gap. I think the one is the highest probability rejection. But I can also see us rejecting at the three somewhere inside of this 4 hour fair value gap, or we just go ahead and take out this. So the two would be where I would look for a continuation because at this point we would have traded out of the fair value gap and back inside. This would be an order block, and then they would be trying to use that to push the market higher. Tracking, tracking. This is Dow. That's Dow, and then let's go Nasdaq. Oops. Same situation, right? I think let me throw those on real quick. Correction. Yep. So same situation, right? We were almost down 15% at the yearly low, right? We were down pretty much 14%, I think, and some change. Yeah, so right at 14 and a half. Once we got to 14 and a half, you see, we ran away from this 15% correction. As soon as we got near it, we ran away from it. And now where are we again? We're at 10% level, right? So this could mean, just like we mentioned before, we have the range we've been trading in this case, a daily fair value gap, just like we were in on Dow. We've been trading inside of that for the past couple days. Now we're rejecting the high of it. We set the high up here right near the fair value gap high, and we coming off of it a little bit. So if we are to continue to go down, Zero to one takes us at or near the monthly open. We likely retrace if we're gonna use this again. We sell off near the middle of the daily fair value gap, and then the three pushes us down into this fair value gap where again, same thing. We could actually see this push down further. I think I'm getting sick, y'all. And please don't let me get sick. Please, please, please don't let me get sick. So this is more along the lines of what we're see, where we come into this 4 hour fair value gap and we likely get our bounce from here. Again, this move was a huge move to the upside. This was in line with Dow hitting its 10% level and probably in line with you know, ES hitting some key level as well, because you're gonna see the same thing on those as well. So then if we keep pushing to the upside, we take out these highs, previous day highs, the weekly high, and then we come back. I think that the one and the three are the most probable areas that we get a rejection from if we haven't gotten it before. And then the three either takes out this high or we stop short of it. And somewhere inside of this area is where I would think that the four would hold up and take us higher. With the five coming into what do we got above this? Order block from the daily. We got a couple order blocks from the daily right here. And there's a fair value gap right there too. So let me just put that on there. Close is 2015. Open is 76. Okay, cool. So this is daily. And then where are we on this? 355, 335. Oh, sorry. Mm, dang it. I'm taking medicine right now. Taking vitamins right now. As soon as I get off this call, I'm going after some tea.
Yeah, it's the springtime, right?
Yeah, I haven't been sick in a while either, too. Okay. All right. So we get that off of there. All right. Here is Dow. No, NASDAQ. Here's NAS. My head been hurting all day. Been having this little sore throat, this little dry cough. I think they got me. I think they might got me.
Take care.
I am trying to avoid it, but
Mhm.
I don't know. Might not be able to make it through this one without getting it. So it almost looks exactly the same. You know, see, we got our low, we got our high, same concepts. We got the monthly opening here. Again, we've been trading at or around this daily or fair value gap. We actually got outside of it on ES, which is the only difference. And we got quite far outside of it on ES, so that's really the only difference in all of them. And then we take out this, we move to the downside, we take out the low here, trade back to the monthly opening. We could get a bounce from the one, but I doubt it right now because I think that getting back into this fair value gap is going to be primary goal. Where you can see again, there's that same order block and fair value gap set up. I don't think there's a correction level near us. Yeah, we're down here with the correction level at 63.84, and we came off of that, right? So likely we try to bounce from here anywhere inside of this order block fair value gap setup. And if we can't get to it, we sell off somewhere near this daily fair value gap or the monthly opening price, and we keep pushing down. I'm actually expecting April to be bearish. I think this year's April is going to be bearish. I think we got a lot of stuff going on that's giving us the logic behind that, but that's just my opinion. Um, Again, and a lot of times in the election years, we get the bearish April anyway, because that's usually the swing into the new cycle, right? And we don't have like we went over this before. We usually don't have if we have a bad April and March time frame, we usually don't get a buy set up for long-term situations until Q4, Q3, Q4, early Q early Q4, late Q3. I said that backwards. Late Q3, early Q4, or late Q3 into Q4 and into Q1 of the next year. So if we do get an upside move, we take out this high, this little high here too. Um, but I think if we can take out this, we might stall below this. If we get a price to hold after attempting to sell off at 3, and we get a move to the upside on the 4 or 5 move, then we can go ahead and see if we can take out that high. But again, we're gonna learn a lot tonight once we hear Trump speak. Um, and that's gonna tell us kind of what the sentiment is from our politicians are right now, and if they're going to do anything about the government, because the government is still not actually fully open. They only partially funded TSA and the Department of Homeland Security. They haven't actually signed everything. They really only have 1.5 more days to actually sign that deal because they're supposed to, a lot of them are already leaving out for their this spring break or Easter break, and they won't be back into the official offices until April 13th. So if we don't get any bills signed before tomorrow into Friday, we may see that we have more issues with TSA. This is also affecting like some other like FEMA as well. So this could definitely linger on later into April. So if we don't have this resolved. So what they did do, they funded them enough to get them paid, and get them some of the back pay, but there's no funding going forward. So they didn't officially open it back up, but they just gave them some money pretty much. And if they don't open it back up, then that means that the next pay period, they're dealing with the same exact thing where they don't have the money to pay them again. So this is basically each side using this as a bargaining tool, and it's not working out for the American people. So that's the people that work there more importantly, but it's also affecting our everybody's travel plans. It's ruining what could have been a great travel year because people are probably not traveling as much as they would because of what's going on. So on that note, that, my friends, is the session. If we don't have any questions,
Can you show me that MNQ correction level?
the MNQ correction level? Yeah,
Mm-hmm.
I got you. I got you. don't know. My little button is going off in here some kind of way. Okay, hold on. I think it's over here. All right, M and Q. And you've been trading in Q a lot lately. Which you don't mess with ES no more?
No, no, I'm doing that.
I'm messing with you. I'm messing with
All I trade is ES. I'm trying to stick with one thing.
you.
You remember I used to trade ES only, then you told me
Mhm,
I can do
mhm,
that. So now,
mhm.
actually, thing is that when I set up my chart in morning, so like in which chart I am fully comfortable. I just see that.
Yeah,
So if on both, then okay. If I have one setup, that I'll stick with that only.
yeah.
Mm,
Okay.
my God.
Yeah, man. I've been noticing you've been on that in Q a lot lately.
Yeah, just because of chart setup.
Let me screenshot it for you.
Yeah, thank you. Miss, I have noted that, but I think I missed one number.
It's okay.
Mhm.
I'll screenshot it. I think this is the correct. You want the rest of them too?
No, no, only I mean.
Okay.
Question: how do you know the correction, Corey? Like, are you using a indicator or are you looking
I
at it from going to the left and saying, "Hey,
just did the math.
um,
Because you got the all-time high here, and you just calculating what's 10% from the all-time high, and then what's 15, what's 20, 25, and 30.
okay,
And it's the same thing they looking at too. Like they just got the data a different way, you know. But even if you like this is the all-time high. So from the all-time high, where's 10%? That's this number right here. Where's 15%? There's that number right here. And it's roughly around this price point, right? But because this only works in ticks, 10% is going to be a little off. 30, the numbers are going to be slightly off because what's 10% is probably like some other decimal number, like, but it only uses 0.25 for every tick. So you can't get 10% and it be um 226,864.80 because it's not gonna give it. It's just gonna round it to
round
the
it up." Yeah.
nearest tick, right? So that's what these levels are. And then if you really want to get fancy, you could just give this number to Chat GPT and say, hey, this is the all-time high. What would be a 10% through 50 to through 30% correction? What would be a 10%, 15, 20, 30, 25, 30% correction on
Correction.
NQ if the all-time high is at this price point? That's the
Yeah,
other way.
I'm gonna try that on my screen.
Mm-hmm. Mm-hmm.
You are
Yep.
using your chat GPT like your household help.
Man, I love Chat GPT,
I
man.
do too. I'll be using
Me
it at
too.
work.
Yeah, me too, me
Man,
too.
I use Chat GPT for everything.
Uh,
Everything. Like
I even
Chat,
started using it for a workout plan.
that's
man,
easy, right?
Chat GPT, man, look at this. So this, I'm gonna give y'all an idea of what I've been working on. And let me stop the recording for this. Let's see. Let's get the music playing. So we're gonna go ahead and end it now. I got some stuff I want to talk about that I don't want to put on camera. So I'm gonna take it off and we're gonna end the session that's recorded right now. So I catch y'all on Sunday. Let me just come out of the recording real quick.